Already, um, with a little bit of a delay. Good morning. Happy Thursday. Happy ECB day. Happy markets. Not so happy dollar today. S&P futures are up 4.5. The 10-year is down 20 ticks. The 30-year is down a point and 20 ticks or so. And in the other fixed income markets, the 3-month T-bill is at 15 basis points, a 3-month LIBOR at 33 basis points, and the Fed funds effective rate is at 6 basis points. Crude is down 1.5% at 36.70, and West Texas is down 90 basis points at 39.40. The euro is strong today, 113.59 as I speak here, up a full cent and a quarter. The strongest currency is the NOK, the Norwegian crown, at up 1.5%, and all currencies up versus the dollar and the G10, except for the yen, that's down 9 basis points. And global equity markets are kind of mixed to flattish here. The FTSE is up 0.5%. The Euro Stoxx is up 5 basis points. In Asia, the Nikkei was up 40 basis points, or 36 to be more precise. The Hang Seng 17, and the CSI 300 in China was up 1 basis point. And if I look around my screen, bigger things, the ruble is the weaker one on the emerging market currencies that we kind of look at more carefully. Global bonds, in Asia they were down. In Europe, actually, it's a mixed bag. Italian bonds are up today. So is Portugal, and so spreads are narrowing. Greece is up, and so the spreads are narrowing. And let me lead to that with the ECB meeting. Every 6 weeks or so, the ECB has a press conference, and they have promised to increase their bond buying program by, I believe, 600 billion. And those numbers appear small now compared to what the Fed is doing. But one of the things that she said is that she's confident that there's going to be a solution in the dispute or in the argument. The German High Court has banned the Bundesbank to participate in some of the ECB operations starting in a few weeks, and that she's confident there's going to be a solution. And actually, I was here paraphrasing inaccurately because that's what the headline says. She didn't actually say that. She said that she's confident that the German parliament will find a solution. She said that she's confident that the German parliament will recognize the supremacy of the European Court of Justice and will preserve ECB independence. So basically, she said that the ECB won't budge. And just for context, for those who haven't followed this too closely, the German High Court has said that there are several things wrong with what the ECB is doing right now, notably that the purchases that the Bundesbank is helping to coordinate amount to a bailout of the periphery. I don't use those words, but that's what it amounts to. And since the German parliament has repeatedly said that is not German policy, this violates that policy, and without explicit permission, they cannot do that. That's a bit of a simplification here, but that's part of it. And then they go into detail on proportionality of buying and so forth. But the short of it is that yes, a central bank is supposed to conduct monetary and not fiscal policy. The ECB is clearly conducting fiscal policy here. And if they want to do that, they need to get the permission from the German government, because otherwise it violates German law. It's really quite simple. And so now the German parliament may want to square that. And the ECB is also right, and Lagarde is right, and she said, "Hey, we are subject to ECJ, that's the European Court of Justice jurisdiction, and not to the German High Court jurisdiction." That's absolutely correct, except that these operations are implemented on each country, and the Bundesbank is implementing these, and so it is the Bundesbank's problem what the German High Court says. And so they have to abide by that. And so with that, it is not an issue for the German parliament. It's foremost an issue for the Bundesbank. And the Bundesbank obviously needs to work with the German parliament to get this resolved. But if the German parliament doesn't act, and at this stage they haven't, and time is running out, it is the Bundesbank's problem. And with that, it is the ECB's problem. And so if Madame Lagarde, with a smile on her face, said she's confident there's a solution to be found, but then kind of says she doesn't budge, I don't know whether that's progress. But in any case, the markets seem to like it, and ultimately, it's quite likely that there's going to be a solution. I mean, this isn't all that different from the early years of the US, where many of the processes hadn't been set up and devised yet. And so the German High Court was absolutely right in blocking these things because they violate the German law. And it's a constitutional kind of issue about who has what responsibilities, and the way the European Union and the Eurozone, it is not a United States of Europe. Certain rights have been ceded to the central authority, so to speak, but there is no general supremacy of the EU on issues. And so that's why you periodically have these sort of constitutional hiccups. And it's a battle that needs to be fought out and resolved by politicians. And so it's not for the ECB to just waltz over that. But apparently they're doing, and so it's going to be interesting to see. But for now, the euro is stronger. And it's not just the euro that's stronger, it's the dollar that's really weaker, broadly weaker, and that's much more related to the broader risk off phase. And indeed, I think more important than the ECB call this morning was the German parliament, not on this particular issue, but they introduced a big stimulus, and most notably lowering the value-added tax from 19% starting July 1st to 16% until the rest of the year. And so that is a stimulus. It's an important stimulus that's undertaken, and so it remains to be seen of what exactly will come of that. But if you've taken note, in recent days, European markets have substantially outperformed US markets. Now, a few days don't make a trend yet, but as you may be aware, that institutional asset managers have been underweighting Europe, and now for the first time you have a big Keynesian stimulus out of Germany. They're falling over backwards and trying to promote growth. Whereas in the US, if you've paid attention, we kind of haven't opened up yet. We have curfews everywhere. We are really sputtering in how we get this economy back up and running. There is some take the viewpoint that current political turmoil doesn't affect market, makes good headlines, but it may affect the November outcome. And if it does have a relevance for the markets. And now, the flip side of that is, odds are that these curfews will be over at some point. Odds are that we will get back on our feet, and also that the corporate America has companies that are probably better equipped for the post-COVID world if one looks beyond the stimulus and so forth. And so there's a good argument to be made that the US markets will resume their leadership. I'm not giving investment advice here, which means I should be showing you my wonderful disclosure I'm trying to show you each day. If my mouse cooperates, I can get that to you. Here we go. And so I'm not trying to give you investment advice. I'm trying to give you some food for thought here as to what maybe what to think about and what to keep in mind. There's obviously the geopolitics of it all are setting the stage, right? And they will set the stage for the types of rules and laws that will be passed. When there's a crisis, we tend to have a patchwork of solutions, and usually, because they're done in a hurry, we will have unintended consequences that come with it. And so the question is always, does it stifle the overall economic engine, or is it just inconvenience and capital is going to move to some other places? And so that obviously remains to be seen. As far as the kind of economic dynamism is concerned, we've obviously fallen very hard in the US with a huge rise in unemployment. But of course, these people will come back to the workforce. And unlike in Europe, where people will go back to their old jobs. In the US, you can readjust them and retool them and get people to go to jobs that will be more needed in how we will be emerging from this. So there's certainly a big positive in that. Um, but it's and also for those who think that, oh, come November everything is going to change if we get a different president, I wouldn't hold my breath for that. This is always going to be the next phase. The sort of polarization we have is there and is to stay. What's said at the top is obviously the tone, but the underlying policies, there's a lot more that's driving that, and ultimately we will always have changes at the margin, um, uh, but uh, but the question really is there what's driving capital allocation when you go to the capital markets? And unfortunately, ever since 2008, it's been central banks that's been driving capital allocation. And so it's very difficult to make investment decisions in that sort of environment. It's one of the reasons why active management has been out of favor. It's because the active manager gets whacked by policymakers all the time. And so it's very difficult to predict those. Now, all that said, the change we've seen of late is that money has been flowing back into risk assets, which also means it has been flowing back into emerging markets, and the dollar has been weakening in this context, and so supported by huge stimulus, and again with other countries being more effective in quotes in providing stimulus. So, going to be interesting to watch. Anyway, that's all for today. Tomorrow we have the big non-farm payroll report, and I will probably also be only at 8 a.m. Pacific time or 11 Eastern time to give my update on Friday. Take care.